All right, welcome back, everyone, to the RLT Pivot podcast. My name is Tracy, and I'm joined with my amazing co-host, Mr. Dan Jansen. How are you, sir?
Doing absolutely terrific. After a chaotic day, I'm doing good right now. So it's all good. Markets are absolutely bullish and not dropping whatsoever. So I think everybody's having a little positivity. But more importantly than the market, today's episode, getting into how to test and practice your strategies. Why would you need to test your strategy, Tracy? If you're just testing your strategy, you're not making money on actual trades. Why waste your time?
Oh my goodness. We've talked about this many times. Okay. Back trading is very important. Testing your strategy. Now, we're going to be talking about trade simulation in particular. And that is very different than trade like back testing. Okay. So back testing, you run it through a computer, it spits out some numbers for you, and you can do that. The actual simulation part is exactly what it says. It's simulating what it would be like if you were actually going through the trade. The difference is you're not putting real money on the table at the time. The goal of simulation is for you to build that trading muscle that you haven't built yet, right? That's the goal. So it's like going to the gym, doing the reps before you go and you lift the car, or before you go and you lift the couch, or whatever. It's the exercise that you're doing in order to prepare yourself to actually go do something different, right? And if you played basketball or volleyball or tennis or any of those sports, you'd go and you would practice before you go and play a game. And the simulation part is exactly that. And how you practice can really impact how you play the game. And I've said this before in another podcast as well. You know, you go out and you practice with intention. That is going to give you the best, fastest, greatest results versus just going out and playing. It's a little bit different. If you just go out with no intention, that's all you're doing. You're just playing. There's no real thing behind it. So, question for you: when you okay, go ahead.
Before you get the question from me,
okay.
During that little rant, I realized I need to hang out and just, or we need TV cameras there, because you're going to the gym, so in your daily life you're lifting cars is what you that was. I don't know anybody that's going to the gyms for the purpose to lift cars throughout their daily life, but okay, go with the question.
They're dinky cars, but anyway.
Regardless. Okay.
It was just an exaggeration. But anyway, the point is that you practice before you go and you do a task. That's the point. And so my question for you is, when you back trade, first of all, what tool do you use to back trade?
So I've used both Thinkorswim and I've used TradingView. They are very, very different. And after I got more comfortable with TradingView, I have not back traded on TOS in years.
Okay. So
So I don't know if technology changed on their end or not, so I don't want to throw anybody in the bus, but it's night and day between the two, from my experience.
What were the differences between the two?
The TradingView is going to give you more of that simulation. Thinkorswim is really dropping candles in, and it's candle by candle. It's I think it's a little more. It's not as lean, not as easy to navigate. The timing, it's either super fast or extremely slow, and you don't really get the feel for it. It's good to just kind of, I would say on Thinkorswim, it's good to, if you have your entries in place, you're trying to get comfortable with the software or something like that. Okay, fine. There's a purpose for it. Or if that's all you have or use, okay, it might be right for some people. But otherwise, TradingView is more of the simulation, where it's almost like the market is still happening, just sped up a little bit more. So you're able to kind of still see the candles develop, and I think that's an extremely important part of back trading.
Really?
Is seeing the candles develop, being able to drop your entries, your stops, plan out the trade, hit play again, and the market's back open.
So when did they start? When did they start allowing like the candle development? I'm just curious, because I haven't seen that on my end. So
on TOS, it's been there for I would say at least a few years. I don't know when they started it, but I was looking at it at least 5, 6, 7 years ago.
Sorry, you said TOS.
No, not on TOS.
Oh, okay.
On TradingView.
On TradingView, really? Because okay, I must not have that availability, because it just still drops a candle in when I hit the forward button. It drops the candle in, But
Okay.
yeah.
If you're on a quicker time frame, it comes across like that.
Okay. Okay.
Yep.
All right. Fair enough. All right. Because there's definitely two different types of simulations. So there's the type of simulation where you click a button and it'll drop a candle in, just the completed candle for whatever time frame you're in. And then there's also the simulation type where you can actually watch that candle develop. Now, I've had to use Trading Sim in order to do that. And the nice thing about Trading Sim is it allows you to go back at least 2 years of data, and that's on a 1 minute candle. You could go back 2 years worth of data and then back trade with that simulated version. You can speed it up, you can slow it down, but the candle actually develops. The disadvantage is it doesn't have all of the tools, the same charting tools, the volume profile, things like that TradingView would have. So you're limited to kind of the tools that you have accessible. The other advantage to Trading Sim, something like that, is that you can actually back trade with 4 different charts at the same time, with 4 different time frames, 4 different actual charts, all back trading at the same time. So if you're following something and you're wanting to watch what Apple's doing at the same time, or you're wanting to watch what the SPY's doing at the same time, you can do that in something like Trading Sim. You cannot do that in something like TradingView. So there's some pros and cons to both. I personally prefer TradingView because it's the tool that I use all the time, just like you. And there's some advantage to that because you have all of the tools available to you. So when you back trade, Dan, my next question for you is, do you just click the button and let it do its thing until you see your setup, or do you do anything else while you're back trading?
So I've done it both. I would say it depends on what I'm looking for specifically.
Okay.
I've done it both ways. If I'm trying to really understand candle sentiment or understand what the process would be if we start breaking a key support, or the candle is giving me some kind of a shooting star or something like that, I want to see how the next couple candles react, how long it takes for a certain break. If it does, why didn't it? Then I'm going more candle to candle on those type of back trades. Otherwise, if I'm looking for, I need a certain setup that I'm trying to back trade, then at that point I'll probably go through the candles, not super fast, but still decent enough until I see a certain candle pattern, or if I pre-drew out a certain support resistance that I'm trying to see how something would interact off of as part of a strategy. I could speed it through until I get to the good stuff.
Okay. Fair enough. And are you tracking all of your back trading trades?
Yes, I have 2, and that's a great point. I think everybody should. I have 2 journals that are identical in terms of the way they're set up. The simulation should be as real as possible, right? They put you into, if you're trying to fly a plane and you're taking the simulation course, every gear, everything is exactly how it would be in an actual plane.
Mm-hmm.
Because when you're in that moment, you want to feel comfortable with everything. So you should, I think everybody should keep track, because if you're back trading and then you get done with 3 weeks of just nonstop back trading, but you don't know the results of it, how do you know if that was actually a winning strategy, or you're just kind of going off of feelings and emotions? Like, I felt like that was a good one.
Yeah.
Was it? Like, how do you know? So yeah, I think keeping journals of that, but keep it separate, obviously, from real trades if you are to the point of trading real money.
Yes, exactly. And you brought up a really good point, because I mentioned earlier that, back trading, you're developing a muscle, you're developing that skill set to be able to take into live trades. That's kind of the goal of it. But the other side of that is exactly what you just said, which is understanding what your strategy can do, get those benchmarks, which we've talked about many, many times on this podcast for sure. So there's two folds. Now, what is kind of a disadvantage of back trading? Somebody asked about back trading versus paper trading. So what is some of the disadvantages of back trading versus paper trading, for instance?
One of the disadvantages, I would, maybe on some of, like, I've never used Sim or which the program you mentioned before, but there's always a little bit of a difference, because one, the market is live during paper trading. You could see not only your stock, but you can also see what the market is doing at that time.
Mm-hmm.
And I think that does give you a different element. If the market is just choppy or all over the place, that could affect if you're actually going to take that day trade, because if maybe the whole market's not really doing anything, and yeah, the setup is there, but how far is it going to go? Where's my real targets? Is there any momentum in the stock? And then I will trade around news a little bit too. So for me, obviously, I don't know what the news is if I'm back trading and I'm going back 6 years. What the question is, why is the market acting that certain way, right?
Mm-hmm.
Why are people being trapped on these certain trades, and what caused that? And that might have a little element that you just don't get when you're back trading, because you're literally just looking at candles, charts, things like that. And there is that little extra development of, okay, well, now we're in real life, and what are the reasonings behind this? And for me, that helps me to at least be able to hold trades longer, or I need to scalp a little bit better, or things like that. So it just changes things for me.
Mm-hmm. Yeah, and I would definitely say that paper trading versus back trading brings a degree of emotion that you have to also develop into the trade. So that's something that is missing when you are in simulation most of the time, because most people are very relaxed when they're in the simulation mode, or the back trading, they don't feel that stress. So that part of trading doesn't get developed. That skill set doesn't get developed through back trading. That gets developed through actual time spent in front of live charts. Now, paper trading can help with that, but the lack of personal money, personal investment in that trade limits the amount of emotion that's also there. But that anxiety that you might be faced with when you see a candle developing and it's going against you is very different than in TradingView, where it might have gone against you, but then it ended up being in profit for you by the time the candle's complete, that you click that button and you can see that it just about stopped you out, but it didn't. And you don't have to sit with that while it's actually developing. So there's definitely some pros and cons to both. Yep.
Absolutely. Yeah. I would say that that paper trading does help to develop the patience muscle. Yep. Which I think in some sense gets ruined by back trading, right? Because back trading, you're speeding up the time, and you're not, if it's a 5-minute candle that you're trading off of, you're not sitting there for the full 5 minutes during back trading. You're sitting there through a second, right? So the paper trading will now, because the market's live, you're now able to watch it develop. I think when people back trade and they don't have enough time in the actual real market, to them it's like, okay, there's my trade, and they just kind of get used to a rhythm of like, oh, there's my trade, I need to take it. Okay, great. There's my trade, I need to take it. In the market, there's a long time in between, like, there's my trade, I need to take it, and there's my next trade. And that could, during that time, you're not used to it. You're not comfortable. So that you're going to have that urge and just want to just jump in and be like, okay, maybe I'm missing something. Maybe I'll find a different stock, or I'll trade a different style. And you just, the back trading will get those more reps in. So if you want to be lifting cars above your head and stuff, that back trading is the way to go. But if you want to slow things down and really start getting the comfortable feeling of like the comfortable feeling of being uncomfortable in the market that's going to come from paper trading, from just experiencing different motions.
So here's the thing, because paper trading takes more time. So if you are wanting to get more time in front of the candles, which is what people need to get experience, they need more time in front of the charts, you can actually modify your practice time. So if you were to go out and practice, say, three-point shots for basketball, and if you went to the three-point line and all you did, you had a big lineup of basketballs and you just kept shooting the basketball, and all you did was count how many balls went into the net. Okay, that's one way of practicing. And that's kind of the back trading, where you go, oh, there's my strategy, take it. There's my strategy, take it. There's my strategy, take it. Log it, take it, log it, take it, log it. And it's really quick. The other way that you can approach it is you can actually go to that three-point line. You can set yourself up. You can take a mental note of how you feel, what your positions are. You can take the shot. You can analyze that shot. You can say, okay, what did I do right? What did I do wrong? Why did it go in? Why didn't it go in? And you really focus with intention on creating that muscle memory of what it felt like to make a good shot, what it felt like to not make a good shot, and you can really dive deep. When I'm back trading, it takes me a very long time to get through one day of back trading. And that's because I'm spending the time analyzing what exactly is happening. I'm actually back trading slow motion. I'm taking everything and trying to absorb as much as I can possibly absorb in that one day, in that trade, with every single candle that's coming up, because I am trying to develop that skill that when I go into live trading, at some point you get good, then you get fast. And that's kind of the mentality that I have, is getting good, then you get fast. And in order to get good, you got to slow it down. You really got to break it down, and you got to analyze it. And most people don't like the patience that's required to do that. They just want to get it done. But if you understand the sports analogy, and if you've ever reached any level of expertise in your field, you'll know that really diving deep and breaking it down and figuring it all out and dissecting it and what have you gives you the best results, or it just takes an awful lot of time, a lot of repetition over and over and over again. So that's kind of one of the things that, and the people that back trade with me when they come into my mentorships, it's like we'll get through one trade and all of a sudden the hour's over. It's like, oh my goodness, but we learned so much during that one trade. We didn't go through quality or quantity, we went through quality. And that's kind of one of the things that you can do to improve your back trading and get it. You can even dive down even deeper and ask yourself, how would I feel when that candle was actually getting down to my stop? Even though you can't see it, put yourself in those shoes and visualize it. What did you feel like? What would you have felt like? Ask yourself those questions, right? So anyway, that's my rant.
If you could take the fake reality of keep in mind, before all of the software got better and crazier, back trading was not an option.
Mm-hmm.
You're either in the market or you're not. It depends on when you're looking. I mean, there's not everybody could pull up a computer chart of the current candles. A lot of people read their newspaper the next day and they said, okay, here's the price. So trading in I would still say it's relatively in infantry stages still of like what's to come in the future. And I think software will develop where it's almost identical to, as much as possible, to a real market, real simulation, back trading. I think there will be more advancements. For today, though, like just the fact that you have the ability to go back to a certain day, go to a 3-minute time frame, see what the candle's doing, and people that are in the markets today that are just like, hey, I want to day trade, they still don't take advantage of the technology, which is, it's remarkable, because anything else that they would do in life, they would want to practice first. If they're going to do something big and, hey, here's my next career. All right, well, there's schooling, there's education, there's time. There's, if you're a nurse, you do the hospital thing, residencies. They don't just say, okay, here's a scissor and go cut the guy's heart open and just have at it. Right. And well, my doctor did, but different story. But put the reps in, put the time in, use the tools, use the back trading. And then, again, try to find the purpose of what you're doing. So if it's going candle to candle because you're trying to understand sentiment of who's in the trade and also kind of your emotions during the trade, how that would work, it's great. If you're trying to find, does this strategy work? I don't want to go out into to the trading market and just have a broken system and I'm just repeating my head on something that doesn't work in the first place. So realistically, use the tools, whether it's paper trading or back trading. I would do both. Like get comfortable with both, because the more you do it, the more you surround yourself with it, just the better you're going to get in the live market of starting to control yourself, stepping out of your shoes, taking a bigger picture of what's actually happening in the markets, the trades, you're trading, why you're making money, why you're losing money. And that's just going to calm you down, give you more of a grounding in trading to propel yourself off of.
Totally great points. Absolutely. Nope, for sure. Now, how often do you actually go through simulation mode and simulate the markets and do all that kind of stuff?
When I first started in the market, I did it all. Right. When I started getting good in the market, it's because I did. Right. So there was a time where the markets would be open and I'd still just be back trading. right? And then after I was back trading, then I was like, okay, let's start paper trading a little bit. I was probably too quick on the paper trade end, to be honest. Like where I was doing like, all right, $5-10 risk after like 2 days of paper trading live markets. I was like, I need something because I need that extra little like some kind of attachment to it.
Mm-hmm.
And that just made it more reality set in. But in the when I first started back trading, I was doing it. I was probably doing it about 5 hours a day, nonstop. Paper trading. I was there from about 9 a.m. in the morning to close, and I did that for quite some time. And then, like I said, I was doing small increments of money and building, and kind of not saying like, okay, today is now when I'm officially a day trader. I'm going to ease into it, and that's the approach that I took. So it wasn't
Nice.
like I'm done ever. And so I was doing it a lot more in the beginning, and I'll still do it quite often by myself. And then all the groups I'm teaching and stuff like that we'll go through. We'll do back trading. So you're kind of always around the market.
Good for you. No, that's good. Now, I don't know if you know this. You probably do because you knew something about the back trading on TradingView that I haven't seen on my end yet, but it's probably not available here yet. But you can actually place a trade during back trading now. Did you know that? If you open up a paper trade account with TradingView, you can actually place the trades in the back trading. That's a new feature that they just brought out within the last month. So that's very exciting. So anyone that is planning on connecting TradingView up to their broker and using TradingView, you can now back trade and practice using the paper trading tools in TradingView. So I thought that was pretty cool because normally you have to do that through the actual live paper trading part, but now you can do it in simulation mode. So very, very cool. Very exciting.
Yeah, that's cool. I haven't seen that yet.
Yeah, it's neat. So, yeah. And then let's see. Are there any other concerns? Oh, well, are there any other issues that you can come up with back trading or with simulation mode period that might cause a problem? Can you think of
just
any?
taking it from, well, there's always the aspect of the emotions of because, and trust me, even when I back trade, I just want to be right so badly on my trades. Like I just want things to work and like where I still get the little bit of emotion. Like even if it's back trading, I lose nothing. If I'm back trading as if the market's open, right? That's me. But when you put actual money on the line and you have actual bills to pay, and there's still a different element that sinks in that I don't care how good the technology is. I don't know that you will ever get that same sense of like, okay, what if I'm winning this trade? What if I'm losing this trade? How does it matter? How do I rotate things? And there is that element. And I think also there's a huge factor to day trading, which is money management, where like how much do you take on a certain trade based on how early it is in the month? Where are you at for the month? Are you up? Are you down? And there's that certain element of money management where if you're back trading, you're probably like, okay, I'm just going for 2 hours. I'm going for 1.2 hours. I'm going 3 because this is the system. This is how I do it, which is fine. But there's also the element which I'll include in my trading of when I take trades, why I take trades, and how quickly I'll be able to scalp a trade or let things try to run longer. That's based on where I'm at for the month, for the week, for the year. And I don't think that element for me when I back trade, you could obviously keep track and understand by your journal of how you do it. For me, if I'm back trading, I'm like, there's a setup. I want to see how these things play out. I want to see like how things work. So at least for me, that would be a little bit of a different thing from real money to paper trading or back trading. No,
good for you. No, it's very, very, very cool. You brought up a good point earlier that I just want to kind of recap on, and that is the risk. You were talking about the size of the positions, and that's something that's really important as well when you are doing your simulation, that you make it as realistic as it's going to be in the real world. So, if you're only planning on trading a $5 R, then you better back trade with a $5 R. Don't back trade with a $500 or a $1,000 or a $5,000 R and then go into real trading going, oh, because I can tell you it's going to play with you in a negative way because it's going to be like, oh, this isn't as good. And you're going to want to try and push it more so you can get some of the gains that you were seeing in your back trading, even though you're trading two different things right there. And for you to jump from, you jump your account up to say a $500 R when you only have an account size that it can account for a $5 R, it's not going to be a good thing, right? So keep it as real as you possibly can, and yeah, go from there. And then the other thing, just to recap again, because we have talked about this with back trading before when we've discussed that, but keep those stats, keep those numbers, and know. The other thing I wanted to say, because when you are in simulation mode in your back trading and you see your setup, how many times can somebody actually recall how it actually hit the target or how it actually hit the stop? Like, what did it look like in between those two actions? We remember, oh yeah, it was a losing trade. But do you remember how it was a losing trade, or do you remember how it was a winning trade? Was it an ugly win? Like, did it take a lot of, really deeper pullbacks than what you were expecting? Like, what?
Did you almost get stopped out before you made money on it? Yeah.
Paying a mental note to some of those can prepare you for the live market, because I can tell you, when you are going through simulation mode and it's happening so fast where you're just writing down your entry and your exit and you're writing out, yeah, it hit the target and this is what it is. You're recalling that it was a winning trade and it was a losing trade, but you're not paying close enough attention to how it got there, how it was successful. So then when we're in a live trade and all of a sudden it does start to turn against you, you start to panic because you're not paying attention to how that actually played out in the back trading. So, try to absorb as much information as you possibly can. And
Win has a really good question. I know we're almost out of time, but he's asking. He says the problem I have with back trading is that I know how it turns out, so I find myself distracted with the preconceived perception on the move. So how do you deal with that, Trace?
So when are you trading with trading or back trading with TradingView? Because I will tell you a little bit of a trick. Yes. Okay, so TradingView. All right. So first of all, I put the stock into basically into the day time frame is what I do. Put the stock into the day time frame, and then I go back to whatever I can go back on, and I make sure that the candles aren't showing on the chart, so you can drag them down, and then just click wherever you want to start. Just click on that, and now, when you're in in the full day time frame, you can click the auto button to bring it back up into view. You're looking at the prior day, okay? And you can start to analyze on the day time frame right there where your levels are, kind of that type of thing from the daily time frame. You can also go down to the 1 hour or whatever. You just can't go into extended hours. Now, because you've already clicked that button, you haven't seen any of the candles that are showing up. And if you make sure that the candles aren't showing on the time or on the screen before you do it, you're not going to see any of that information. So just randomly click somewhere, you're on the day time frame. Now, once you do your analysis and you get all your lines, then you can go to your lower time frame. And your lower time frame doesn't have any candles yet. Once you start progressing through each candle, you're not going to know what the daily was. So as long as you don't go back to the daily to look at it afterwards, then you should be able to continue from there. And I go back as far as I can, and I just start trading every single day, one after the other, without ever looking at the candles. And I don't have a memory like Jeremy that's photographic, and I could not tell you what it did on January 16th of 2020. I couldn't tell you what the day was, so I can go back and randomly pick those days, and I don't know. So as long as you do not go into a time frame that's higher than the time frame that you're in once you start the playback, then you should be good. So I hope that makes sense, but that's the way that I do it. And I always, once I'm done the full day, you can then go straight to a day time frame because the next candle hasn't played out yet. So as long as you don't click that next candle, you can look at the day time frame, analyze it, analyze your hourly, then go back into your intraday chart and start the playback again so that you can continue to move forward. So that's the way that I do it. And if you want any additional information like what the pre-market was, all that type of stuff, I take notes. And so you'd have to go back to the date and see what the pre-market was, what the pre-market low was, where all that information was, and just manually plot it on your chart if you want to go to that extent. So that's kind of the way that I do it. And yeah, so, but again, if you go with the intent to build a specific muscle, it really doesn't matter what the outcome is. Because if your goal is to learn, regardless of whether it worked or whether it didn't work, you're looking for the setup, and your goal is to ask yourself, why did it work? Why didn't it work? And try and pick up as much information as you possibly can. Then what the outcome is, it shouldn't matter. It shouldn't matter whether you know it's a winning trade or whether it wasn't a winning trade, because your goal is not just to get into the trade, get out of the trade and just log it. Your goal is to actually learn something from it. So absorb as much of that information. What made it a winning trade? Because I can tell you, I know Jeremy does this. Dan, I don't know if you do this, so you can answer this in a second, but I will re-back trade the same trade over and over and over and over and over and over and over again. Because it's like going, and I don't know if there's any golfers in the view, but if you go and you make that nice swing, there's something that just feels different when you make a nice swing of the golf club and you hit that ball just perfectly. You hit the sweet spot and you can feel it. It's something totally different than anything else. So if you can, when you go and you play that and you're trying to rebuild that same muscle, that's kind of the same thing of playing the same trade over and over again. You're rebuilding. What does that winning trade look like? I'm building that muscle memory. What does it look like? What does it look like? Keep playing it over and over again. I know what the outcome is, but I'm trying to tell my muscles, this is what it looks like. This is what a winning trade looks like. And why is that important? Because if I know I'm in a winning trade, I can hold it longer. Right? If I don't know that I'm in a winning trade, then I start to panic. It starts to hit certain levels and I start to go, ooh, my P&L's high. I better get out. And then you exit and you never hold to the end. So Dan, do you replay the same trade over and over again?
No, I'll review trades.
Yep.
I'll review trades that I've taken from back trading. I'll review trades that I take live market, but I have not done that. So I'm going to add that to the list because I like it because
it's true.
I think it makes 100% make sense.
Yep. Yeah. You know, I mean, people will, and that's the other thing. So people will practice their losing trades. They'll review their losing trades, but they don't review the winning trades. Well, you need to review the winning trades because you need to learn what things look like when they're working in your favor, not just what they look like when they're not in your favor. Okay. That's good to know because there's offense and defense. So learning what it looks like when it's not in your favor, that's your defense. Learning what it looks like when it's working, that's your offense. And you need to develop both of those skills. So understand them and then develop them. And then you've got the ability to exit when you need to exit, and you've got the ability to hold when you need to hold. And that's where it comes from. So yeah. Anyway, I think we're out of time.
Unfortunately, it's always too quick. Plus, I know you got to go get some lifting to the cars. So we do appreciate you guys joining us each and every week. Thank you guys for joining us. You guys can always check out more information on reallifetrading.com. We have full free classes, intermediate, beginner, and advanced. Not sure why I put it in that order, but you guys are incredible. And we'll see you guys in the next Pivot podcast. Take it easy, guys.
Bye.